Dear friends of Volumetric Trading, good morning from Eduardo Buratini. It's Tuesday, October 28th, 2025. As usual, let's take a look at the main American indices, the S&P 500 and the Nasdaq. We've just come through, let's say, 2 days. A bit unusual, but actually not that unusual, not really that much. In short, especially considering other analyses and previous days we've already looked at, because we've reached new all-time highs for both derivatives. For the S&P, we've reached the 6,900 mark. And all of this happened in just 2 days, basically in 2 sessions, with a strong upward push. In fact, there have been 2 sessions, yesterday, Monday, and last Friday, that in RTH even left upward gaps. And as we can see from this chart, which only includes RTH, we can see that the 2 gaps were consecutive and actually quite significant in terms of size. So we can definitely consider this a market that's pushing upward. However, there's a catch. Actually, there are several. Undoubtedly, even in yesterday's session, we saw not only a fairly straightforward price action, we can see a pretty clear trend. Let's say it's well defined, with a structure of higher highs and higher lows, and even a certain slope. Okay, so this is definitely a detail I would already focus on. The movement definitely started in a way that was absolutely consistent with the order flow analysis as well. Because we can see that, let's say, at the start of what happened, the most bullish swing generated quite significant pressure right from the early stages of the opening. Cash was pushing with bullish acceleration. And all of this happened around the 6,800 area. During yesterday's session, we saw several big trades take place. Thank you. Most of these were obviously pushing in the direction of the main trend. So we can definitely consider this participation as contributing to accumulation. Some of these big trades, on the other hand, acted as support points. They were absorbed. So, in combination with the big trades that were moving in the direction of the trend, there was a fairly significant confluence, likely also from an institutional perspective, involving large players. However, this gave us a situation that still deserves at least some attention. What is it that I want to bring to your attention? In this analysis, we can see that, first of all, the gaps we saw and discussed a little while ago, are now starting to become 2 consecutive gaps. The price pushed up very strongly. Obviously, a gap is a sign of strength, but a lot of strength, too much strength, all at once. Let's say when it happens so close together, it's easy for it to lead to an excessive situation. Because in effect, despite all this strength, both in terms of volume structure and order flow, it has actually also created what is an overextension of the market. If we go and look at basically the entire movement of the S&P, the whole swing, which over the last few sessions has happened without ever having any major pullbacks. We have an extended swing that covers basically 3.5% of the index. So it's definitely an overextension, even just geometrically speaking, and quite a significant one. And there's also another detail to consider. Let's take a moment to evaluate how the day went as a whole, and let's do that by adding a volume profile to our chart. Break time equals 0.5s / let's say we use a custom one, alongside the volume profile of the day itself, so we can compare and analyze both. If we take the entire regular trading hours, or RTH session, and so we focus specifically on the opening part, we can see that we are explicitly excluding the closing part. Break time equals 0.5s / because the volume that comes in during the settlement phase can obviously have a greater influence on the shape of the profile. And in this situation, we see that compared to the daily session profile, something completely different is created. In other words, we have a definite delta push, a very strong one, with a delta that almost reaches its climax. If we want to look at it that way, by comparing the entire session, thank you. We can also see this from the intraday cumulative delta, just for the RTH session, where there was a very significant push in complete convergence with the price, but also a really substantial spike. We reached a cumulative delta of 41,000, which, honestly, is significant even in absolute terms. What makes me think a bit is that if we look at this volume profile here, we see that actually the value, leaving aside the last few minutes before the close, which, of course, with so much volume being traded, it's obvious that they often tend to move the POC right to the closing level, and that's definitely something we need to take into account. But looking at how all the volumes were distributed throughout the session, you can see that the upper part tends to be thin, so the POC, the whole acceptance area, the whole volume area, basically stayed at the beginning of this entire move. So, it seems clear that it was definitely a very strong move, with a lot of intrinsic strength, a truly directional, impulsive, and forceful day. However, with only moderate participation, especially in the upper part, and then in the closing phase, so to speak. If there was acceptance, for sure, there was a higher number of volumes traded that shifted the POC. But here, you can see that even around this POC, there isn't much. And that's exactly the clue that led me to this. It's this consideration that brings me to this point. Around this POC, there isn't such a wide, well-established distribution area. It's more like the volume is all concentrated around the settlement area. So for me, this is the first warning sign that makes me say, for today's session, be careful because there could be a real risk of a retracement, even though yesterday the market showed us strength in absolute terms. But of course, this doesn't mean that the market can't keep rising and make new highs in the sessions to come. However, today more than ever compared to other days, maybe. On a total downtrend day within an overall uptrend, I'm definitely expecting a purely technical correction. At the very least, I expect it could come back to retest the area between 6,890 and 6,880, where we can see that it actually started. As you can see from the big trades, the whole accumulation phase. Of course, we're also keeping an eye on what were the highs of yesterday's RTH session, so around 6,910. Because obviously, the high of a trend day is always, and especially for a trend day that sets new positive highs. In short, the all-time highs clearly remain a standard level to always keep an eye on. Anyway, basically, the real hot level of the day is right around there. Thank you. It's within the area between 6,900 and 8,900, right where you might want to reassess. This is about the possible continuation of the trend, where, obviously, this whole area of previous value needs to be maintained. Also, because if that's not the case, you can see that we would get much closer to what happened before, in a significant way. The gap between Friday's RTH and yesterday's RTH. And in that case, the risk of a short covering becomes particularly significant, especially if this technical area were to give way and create acceptance below it. In fact, just to keep a hypothesis, to maintain a realistic view, this should only be an area that gets touched and retested. And from there, we should see everything we basically saw during yesterday's session again. So, absorptions, accelerations, and participation, especially acceptance, which continues to shift more and more towards 6,900. Let's also take a look from another perspective. NASDAQ. The NASDAQ. In its own unique and particular way, the market basically made a move that was very similar, almost identical in nature, to what we observed previously with the S&P. Here too, in this specific situation, we see 2 consecutive days back to back with a double gap, which in this case also gives us a small but nonetheless important warning sign of a possible excess that the gaps themselves can somehow highlight or bring to our attention. And the NASDAQ in this context reached exactly the 26,000 level, also creating new all-time highs for the NASDAQ index. We can see that here as well. The situation on the volume profile is quite similar, almost mirroring what we saw before. In fact, here the price even accelerated beyond the point of control, or POC. But even this POC, in this particular case, wasn't actually created during the settlement period, which is a noteworthy detail to keep in mind. A bit earlier, so in this case, the hypothesis of a settlement is even more substantial, even though it still wasn't able to shift the POC that much. But in this case, it's a POC that has still risen proportionally compared to the S&P. In fact, if we compare the two narratives we've had, we see that the NASDAQ has extended a lot, even compared to its own intraday range. So, the reading here is exactly the same. Obviously, here too, there's a real possibility, probably less likely than with the S&P, of a retracement, because the NASDAQ has shown a bit more strength, especially in the immediate intraday. We can see it here as well from the various pressures that dominated the whole day and a price action that's even more tilted to the upside. But in fact, the situation from the point of view of acceptance, extension, and the presence of gaps is exactly the same. So, in both cases, we're looking at overextended markets with a probable excess of volume. A probable excess of momentum. So, we could very well have reached a likely exhaustion point, and that's exactly what we should be watching for today. But we can clearly see that the NASDAQ, unlike the S&P 500 index, if we take a closer look at the cumulative breadth difference, or CBD, for the day, really shined a lot less overall. What does this actually mean in practical terms? It means there wasn't such a dominant delta, there wasn't a prevailing push, and there was quite a bit of back and forth. So it's a market that still went up, made new highs it did. A full-fledged trend day, even though there was a lot of fighting going on. This leads me to say that the NASDAQ, in any case, showed more strength, or rather, not more strength, but a kind of strength that was a bit more genuine in rising and reaching its new levels. So probably, if we were to see a correction, it would be a bit more likely to happen on the S&P, or at least to see it on the S&P. It would likely be a bit deeper compared to the NASDAQ. In fact, for the NASDAQ, the most important level I feel like considering is exactly 25,900. A round number, a technical level, the main acceptance level from yesterday. So a retest of this value area could be what gives us the most important information to assess a possible continuation. Or if, in fact, yesterday was more of a precursor session for what could turn into a technical correction today. Obviously, this analysis is intended purely for educational and informational purposes and is not an incentive to take a position. Thank you in advance for your attention. See you later for those who are Volumetric clients, Trading with VLive, an event where, as we do twice a week, every week, we trade live on the American indices. I wish you all a good day and good trading.